Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Tuesday, March 31st, 2026, and this was a full-on risk-on relief rally. A ceasefire headline hit mid-session, crude rolled over, and the market instantly treated it like permission to unwind that oil and war hedge. And then big tech did what it always does in these moments, pulled the whole tape higher into quarter end. Now look at the S&P 500 heat map. It's basically a sea of green. The brightest blocks are tech and communication services, semis, and the megacap platforms really lit up. And the contrast matters. While most of the board turned higher, energy stayed noticeably weaker. That's the visual fingerprint of a narrative shift in real time. So what was the money actually doing? It rotated straight back into duration and beta, tech and communication services leading, consumer discretionary and industrials joining the move. And the market funded that rotation by leaning away from energy as crude eased. That's the key. It didn't trade like a single stock index trick. It traded like re-risking systems, shorts, hedges, getting unwound on a headline catalyst. Zoom out. This quarter's tension has been simple. Geopolitics pushing oil higher and oil pushing inflation risk back into the market. Today didn't solve that, but it forced a repositioning. We saw strong participation, Nasdaq led, but small caps joined too, and energy staying red was the tell that traders were explicitly removing the war and oil premium. The warning is straightforward. If ceasefire expectations fade and crude pops back, this kind of rally can get tested fast. One piece of desk chatter made the rounds. Traders talked about a large NVDA June 140 to 150 call spread bought intraday. To be clear, that's chatter, unverified, but it fit the vibe of the day. NVIDIA was already acting like the sentiment bellwether, and talk like this can add fuel to that chase the general's mindset when the tape flips risk on. NVIDIA was front and center, up about 5.6%. This is the cleanest AI beta expression in the market, and when the macro fear premium fades, especially the oil and inflation channel, NVIDIA tends to lead the chase, and layered on top was that same unconfirmed call spread chatter, which may have reinforced the bullish tone even if it wasn't the main driver. Meta was an outlier winner, up about 6.7%. Communication services was one of the strongest spots on the heat map, and Meta is a heavyweight there. On a day where money rotates back into the liquid generals, Meta's move reads like high-conviction participation in the relief rally, not some niche corner of the market. Google climbed about 5.1%, another platform general that matters for both sentiment and index math. In a relief rally built on unwinding hedges and re-adding risk, strength in Google is what makes the tape feel cohesive, not just one stock, but the whole leadership complex moving together. Microsoft added just over 3.1%. It matters here because it's often the quality growth confirmer. On sessions that are purely speculative, you don't always get clean follow-through in names like this. Today, it moved with the rest of megacap tech, reinforcing that this rally wasn't just about the highest octane trades. Tesla jumped about 4.6%. Tesla tends to trade like a sentiment thermometer. When the market flips into relief mode and people stop paying for defense, this is one of the first places you see the appetite for volatility show up, and today it fit the broader re-risking tone. Exxon slipped just over 1%, and that's the tell. With most of the board green, energy being red is what confirms today's story. Traders were actively pulling off the war and oil hedge as crude eased. Going forward, Exxon is a quick check on whether that de-escalation pricing is sticking or starting to fade. Now, the forward look. First, geopolitics, any confirmed ceasefire or diplomacy around the Iran war, and any shipping or oil headlines can still swing this tape. Second, oil follow-through. Brent settled just under $104, down about 3.2% on the day, and traders are treating crude like the real-time inflation fear gauge. Third, the macro calendar in the week of April 6th, ISM services on Monday, durable goods Tuesday, FOMC minutes Wednesday, then Thursday's combo of core PCE, GDP, and jobless claims, and finally on Friday, CPI plus University of Michigan sentiment and inflation expectations. So that's the session, a headline-driven relief rally that restored risk appetite into quarter end. Leadership was clear. Tech and communication services and energy weakness confirmed that traders were pulling off the war and oil hedge. Next session, don't overcomplicate it. Watch the headlines, watch crude, and watch whether the generals hold the line if the story gets noisy again. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.